What's going on, YouTube? Today we're going to be going over how to grow your real estate portfolio with Fundrise. As you saw from the thumbnail, it is possible to make money in this market. I know a lot of investment vehicles today are sitting down, some in the double digits, such as stocks, equities, even venture capital. But it is possible to continue to make money in this environment. Today we're going to be going through Fundrise, which is one of the real estate platforms I use to invest. I've used it now for a little over 18 months. Outside of Q3 of this year, I've made money every single quarter, and I'm going to show you how to do the same thing. So for those that aren't familiar with Fundrise, Fundrise is a collaborative investing platform where you do much like you would with an ETF. You buy slices in different types of strategies, and we'll go through that in a minute. It helps to alleviate a bottleneck in terms of owning one particular home or one particular asset class in a certain part of the country. You're able to diversify your portfolio while still getting dividends and appreciation on capital. Fundrise is in the cumulative part of the economy, where you've got other things like here, which I've mentioned on the channel. You've got Wealthfront, which does some real estate investing as well. And you also have the ability to do Airbnb arbitrage. Now, for those of you looking for a hands-off approach, a set it and forget it, this is where Fundrise really shines. So, what's the catch here? What's the, why should you invest in something like this? Well, for one, if you look here on the homepage, you're able to see it's very user-friendly, the ease of use, same thing on the mobile app. But number two, once you get your account up and running, and I'm going to leave my referral link down in the description. Once you go in here to portfolio, you're able to see everything that you're currently invested in. So I mentioned diversification a minute ago. You'll see several different positions that I have, and most of it is in this flagship real estate fund. But depending on your account value and the allocation you're willing to accept from a time and a risk perspective, you can really make some good money here, all passively, I might add. Fundrise is great in this sense because you do see all your positions here, and then you can drill down into each fund. So in this case, 71% of my portfolio is in this flagship real estate fund. Now, when I go down here, I can actually see the cost of the shares, the quantity of shares, everything in here, just like an ETF. You buy slices in each type of strategy that you want to invest in. You also have dividends, and then you also have advisory fees. But in this case, you'll see my actual returns for this from a dividend perspective. Since I started this fund back about 18 months ago, I've earned almost $100 in dividends. The appreciation on capital has been $563, and then I've had advisory fees to manage the fund from Fundrise, of course. However, when I go down here, this is where the meat and potatoes of the investment starts to shine. You can see all the different projects in here, and a project is nothing more than either a single family rental, a commercial rental, a short-term rental, or it could be a mixture of all three. So you have a couple different ways to look at this. You can go through and do a tile view, you can do a list view, or you can look at the map. So you're really looking, if you want to look at investment size, you want to narrow it down by location, you can do that, or you can simply pull up a map. In this case, I'm going to go back to the tile view, and I'm just going to click on one of these investments here. So you've got a single family rental. It's in Georgia, it's in the Growthy REIT, and it's in the real estate fund. This strategy, it's in the strategy called value add. So they're really looking to, from a investment standpoint, you're looking for more outsized returns here. And if I click into the view details button, you're actually able to see a little bit more information around this project. So you get pictures, you see how the funding came in from an equity standpoint. So most of this came from the flagship real estate fund, and the equity did come from another E-REIT in the portfolio. This was a recently acquired property, so there's not a whole lot to report on. It was acquired in August. They updated in October 24th, several days ago. And let me go back here. So in this case, if I go look at something that has been here for a little bit longer, I'll go down and I'll look at something like, here's a multifamily rental in Palm Bay, Florida. This is fixed income, so you're getting a targeted rate of return on your investment over the allocated period of time. And this shows something that we didn't have in the last investment strategy, or in the last investment vehicle. You have equity coming from a third-party source. You do have a debt obligation here required to pay back. You see that it's currently active. It was acquired a little over a year ago, and if I zoom in here, you can actually see some of the pictures. But this is just your normal, your single or your apartment development. It actually walks you through and tells you the whole background. In this case, it's a $6 million construction of a 252 unit apartment in Palm Bay, Florida. It fits in their Sunbelt strategy, which basically means they're acquiring a lot of real estate in the Sunbelt area. So you've got Arizona, Texas, Louisiana, Georgia, Florida, the Carolinas. That's where they're spending a lot of their time and a lot of their money. You can check out the strategy here. I'm not going to go into each individual strategy, but this is a really good way to see, if you're worried about, where things are going, this helps you, lock that in. One thing I will tell you is you do not get to pick and choose investments with Fundrise. And that could be a good or bad thing. For me, most of my investing, I'm becoming more of a passive investor the older I've gotten. And what does that mean? It means that I spend less time choosing individual stocks and ETFs and real estate, and I simply let someone else manage that for me. Does that mean that I don't have done Airbnb arbitrage, or I don't pick individual investments to look at from a stock or a venture capital or retail perspective? Absolutely not. I recently talked about here.com, which is a Airbnb rental company that just got started last year. I've invested in them, and that's where you can individually pick the short-term rentals, the Airbnb. However, for something like this is more long-term. I will stress that this is more of a 5 to 10 year investment. So if you're looking to pull your money out in the next, I would say 12 to 48 months, this may not be the correct investment for you. Okay, so this is one of the funds in here, the real estate fund. Let me go back to my portfolio and look at something, a little bit different. So this is one of their E-REITs. This is their East Coast E-REIT, obviously focused on the East Coast. Very small percentage of my portfolio. However, when I go down here, I can see we have a lot less projects, and this is more industrial in nature. So in this case, you've got distribution centers. You've got, if I look at this one's in Virginia. I'm going to open this up. The investment size is much bigger. You're getting a lot more capital to come in. However, the returns have been pretty good. 6.6 to 11.3. So really hard to beat that in today's market, especially on the single family rental or the single family side. So I think the industrial, the commercial space is going to continue to grow, especially on the distribution center side with the likes of Amazon, Walmart, Target, etc., continuing to pour more money into e-commerce. All right, so let's go back to the performance. I'm sure everyone wants to see that. I talked in the thumbnail. I've returned a little over 4% net of cost this year from Fundrise. If you look back here, you can actually see that. So if I look through, this is for 2022, all these different funds, what their final rate of return was, or net asset value at the end of each quarter. Obviously Q1, 4.1, Q2, 1.5, Q3 actually went negative, and in Q4, I'm in the 0.1%. So net of fees this year, I'm at 4.3%. So really hard to beat that at the end of the year. I think we'll probably end up around 4%. I think there'll probably be a little bit of a loss in Q4, but considering equities, stock, venture capital, really hard to even break even, and plus you balance in inflation at well over 15%. Getting a 4.3% return net of fees, I think is truly remarkable in a completely hands-off approach. Down here, it actually gets in the nitty-gritty. So here's some of the returns I've received this year: $496 this year net of fees, and then here's net cash in and out. So again, a very easy way to get exposure to real estate in an automated perspective without having to go in and pick and choose individual investments, individual real estate packages. I just think it's just a fantastic way to get your feet wet. One other thing I will go to is the investment plan. You do have several options in here. So for those, and I'm not sure what the limit is, or I'm sorry, the floor, but there's a basic plan, there's a standard plan, and each time that you add more capital in through automatic investing or through one lump sum, you're able to access different plans. So when I started, I was on the basic plan. Then you move into some of these standard plans where you have different choices. So you have 3 choices here. You have supplemental, that basically dividends, gives you better returns every quarter, but at the loss of a much greater return, several years out. So you're getting that quick passive income every quarter when they distribute dividends, but in that case, you're also giving up potential long-term gains. Balance investing, you're getting, kind of the best of both worlds. You're getting dividends, not a lot, but you're also getting the long-term growth. And then obviously long-term growth, you're not getting a lot of dividends up front, but you're getting outsized returns. And then plus plans, which is the one I'm on, gives you access to things like the East Coast E-REIT, some of those more advanced, higher potential growth opportunities than just the standard or the basic portfolio. And I'm sure a lot of you have noticed, I dollar cost average into this. I've talked about this several times before on my channel, but dollar cost averaging, setting that up, setting it, forgetting it, not worrying about, hey, I had a down quarter, which I did for Q3 in this, but since that's the first down quarter I've had, I'll continue to buy these shares inside of Fundrise, dollar cost average, and just set it and forget it. So this was a good intro of how to grow your real estate portfolio with Fundrise. I may do a deeper dive into each portfolio or into each tranche of my portfolio. If you're interested in that, please let me know. Leave a comment down in the description. Let me know what real estate platforms you're using today to grow your wealth, and without sacrificing any type of control. Or if you do like that control, let me know what you're using there. So until next time, take care. Bye-bye.